What's up, Banter fam? Welcome back to the show. There's an age-old adage which is starting to pop up now that we are a week away from May, and that is the saying, sell in May, go away. So in today's show, I actually want to look at some of the historical indicators behind this sell in May theory for both the stock market and the crypto market and work out whether this deep could get even deeper into the month of May and whether this was a local top or simply whether this is just a pullback and the whole sell in May narrative is nothing to worry about. I'm also going to go through the altcoin market and give you guys some key updates on some big announcements that we got over the weekend for altcoins, as well as a general market update. And in this video, I've gotten opinions from a variety of big traders that I respect to help you guys navigate through this market, because we have had a huge sell-off. And I think the question on a lot of people's lips is, do we buy this dip? Is this just a standard dip in what would be a resumed bull trend, or are we coming back down potentially, to range highs and even lower, as you see outlined on my chart, after forming a local top? And I think that's definitely something we'll discuss. And the whole sell in May adage, I think, becomes very important to look at the quarterly performance of stocks and crypto. So thank you for hanging out. I know it's a Sunday in the US. It might be an early Monday morning if you're in Australia or Europe. So thank you guys for chilling out with me. Of course, at the end of the show, as you guys know, we'll go through a Q&A, we'll answer questions, we'll talk about the market, we might degen a little bit, talk about meme coins. But before we get into the fun stuff, I think there's lots of important stuff happening this week on the macro side. So the first thing to note is that this is a very busy week for macro data. It is, I guess, a trader's dream, because I think there's going to be quite a lot of volatility. So if you are a trader, I would definitely start preparing for what could be a volatile week and make sure your levels on different altcoins and Bitcoin and ETH are marked out correctly, because we've got consumer confidence data on Tuesday, home sales data on Tuesday as well as GDP data that will show how strong the economy is, basically emphasizing the growth of the US economy. Then we have PCE inflation data on Friday. This tends to lead the next FOMC. Obviously, we had CPI data a couple of weeks ago. Now we get the PCE, consumer expenditure data. Then we have, I think, what is pretty important, which is a big earnings season. So some of the biggest companies around the world are going to put in their earnings. So you've got Coca-Cola, Amazon, McDonald's, you've got Google, all these big companies, basically the world's biggest companies, are all reporting. And around earnings seasons, we typically see lots of market volatility for the stock market. And of course, crypto being an asset class, which is quite correlated to stocks, they kind of move in tandem with each other. Yes, Bitcoin has decorrelated on some days in some instances over the last few weeks, but in general, Bitcoin and stocks are still fairly correlated and they roughly trade in line with each other. I do think that the decorrelation we saw from Bitcoin was temporary in the midst of a banking collapse. And although that discrepancy could grow over time if there's more issues with the traditional finance section, I wouldn't base my entire thesis over a decoupling, at least not quite yet. I don't think we're quite there yet. So lots of earnings to come, which is only going to add to the volatility. The earnings start tomorrow in the US, and then of course on next week that they continue on throughout the week. So Monday, Tuesday, Wednesday, Thursday, Friday, basically the whole week, we're going to get lots and lots of earnings. 𝗕𝗏𝗁 did a big earnings guide for the week. Basically, it's mentioned the term AI as many times as possible, announce more layoffs, use cash from layoffs for stock buybacks, blame higher interest rates for everything. If your tech stocks does this, it's probably post its best day in years. So he's kind of joking a little bit there, but I think it has some merit to it that potentially we are going to see more layoffs. It will be interesting to see some of the jobs numbers that come out preceding some of these, following some of these layoffs. And higher interest rates are definitely going to be a theme, because the thing with interest rates is that they're a lagging indicator. So when you raise interest rates, companies in the jobs market doesn't really quite feel the full effect until months following those interest rate rises. And by all accounts, we're still going to get one more interest rate rise in May. So there's still going to be one more before a pause, and then we're looking at rate cuts in July. That's the expectation that the market is laying out. So the Fed pivot is happening in July. The market knows this, though. The market's forward-looking, and the market is pricing this in. Both stocks and Bitcoin is pricing this in because it knows the probability is that we get another hike, then a pause, then a cut. So because it's forward-looking, I wouldn't necessarily say the pivot date is going to be the trigger for a huge new bull run. As I said, interest rates are a lagging indicator. And the other thing is, typically what happens is, and there's data to back this up, if you want to go look for it in your own time. Sorry, I don't have it off the top of my head. What typically happens is the full effect of the interest rate cycle actually isn't priced into the market till after the rate cuts. So what we've actually seen is stock market bounces rate cuts, and then the real stock market declines happen after the rate cuts. So after the Fed actually pivots, that's when you start to get the decline, because that's when bad economic data sets in and starts to spook the market. And I guess the reason why I'm not like fully in crypto right now or going too degen or crazy, and I still have a lot of capital on the side, as you guys know, is because I'm still wary of some of the lagging effects, and I'm still not comfortable enough to go full risk on mode until we get a better feel for how the market responds to rate cuts, because there is a strong chance that we do see a sell-off. Now, that's just my opinion. I might be wrong, but I'm just being a bit cautious now. I'm in the market. I still have positions. I'm still looking at trading altcoins. But in terms of adding to long-term positions, I still think we're going to get better prices. So I'm laying off. But your thesis might differ from mine. I just being a little bit wary, because, there's a lot of very key data to come out, and that could sway the market a little bit. So let's just look at Bitcoin, though, because zoom into a bit more of a shorter time horizon here and not get too ahead of ourselves looking into Q3, Q4. There are a few key levels to watch. So on my charts, the main level for us to really hold is the 26.5 level. So you see we're still in my blue box. So technically we're still holding here. Although if we don't make a higher low, so if we make a lower low here, then I'm pretty aware of the fact that range high becomes a real possibility. So we need to see a bounce here. We need to see a little bit of momentum out of this blue box, and then a pullback into this box, and then I'll be more confident buying altcoins. So that would be something like this. A little bit a bounce down, come up, retest, and then buying alts would be a decent play. Because Bitcoin dominance is going up again, I'm not in a rush to buy alts, so I'm not rushing to buy, because I think if Bitcoin pumps, what will happen is Bitcoin will pump, that will lead the market, and then some of those profits will filter into alts. So I'm not too concerned about trying to time the alt bottom here if this is the local bottom, because we know Bitcoin's going to rally, and then that'll be our signal to get into alts on the pullback back into this zone. That's if this zone holds, right? That's if. Now, obviously, we're going to see that play out over the next few days. This is just my plan anyway. But if it doesn't hold, so if we don't get that bounce and retest, and if we just keep going down and keep bleeding, let's say earnings are bad, then you've got 26.5 as your next really key level. And then in my opinion, a test of range highs really comes back into play. And the thing is, with range high, I don't expect us to just have a perfect bounce. I think we could actually break below and come back into this area, which was a major area of resistance at around the 24.5 level. Now, 24.5 would, in my opinion, be a very good buying level. So 24.5 to 25, I'm definitely looking at stocking up. That's quite a key level for me, because if we lose that, I have pretty clear invalidation. Like, that was just a huge fake out and we're going back down to 20K. But if we do hold that, then that's actually quite a good risk reward long area for me. So for the short-term trades, you want to see positive price action, bounce, retest, and some profit filtering back into alts. If not, if we do break down, then I would be targeting the range high area for some buying. There's no rush to make buys, I don't think. Altcoins don't look very good. Later in the show, we're going to look through the altcoin charts. But the thing is, you guys know, like last week, I was talking a lot about how I'm always trading altcoins based on their BTC pair, because my goal as a trader is to always outperform Bitcoin. My goal as a trader isn't to just make dollars, because, I'm a believer in Bitcoin and Ethereum long term, and I want to add to those bags as much as possible long term. So if I'm going to be in an altcoin, I need to make sure I'm beating Bitcoin. So I trade on the Bitcoin pairs. And a lot of altcoins now are starting to, although they had like a short-term bounce on their BTC pairs, now they're starting to look quite crap. And a lot of them have come back down, broken lower levels, or they're just looking very shaky on the last level of support. Not just on the Bitcoin pairs, but if you line that up with the USD pairs, it's kind of the same story. So that's why I'm not in a huge rush. Now, there are a few altcoins which look better than others, which I'm DCAing into. I'm going to, as once again, talk about that at the end of the show when we get into the more altcoin stuff. But in general, I don't think altcoins have found a bottom, at least not all alts. There are some strong exceptions to the market. But if you were trying to be a buyer of Cardano or AVAX or Solana, then they don't look amazing. Doesn't seem like a screaming buy day for me, especially heading into a week worth of earnings. Of course, none of this is financial advice. It's just my opinion, but I'll give you my 2 cents anyway. So here are the Bitcoin levels that Dan Crypto Trades is watching, kind of similar to my levels actually. So he has, instead of my blue box, he has a zone at 27.1 to 27.3. That's his next zone that he's watching. So that would be the zone that I was talking about. So I would like to see a bounce and then a pull back into that zone, because that's a better place for me to buy altcoins. If you were buying Bitcoin now for a bounce or trading Bitcoin now for a bounce, maybe you could do it. You could pick off a scalp on Bitcoin, but I prefer to trade alts and get like the higher beta plays after we have market direction. But if you were trading Bitcoin, you could hope for a bounce in that region. 27.1 would be your kind of last ditch area to bounce. And then of course, you've got range high. So Dan's outlined 25.3. That's pretty much in line with my level. Yeah, 25.2, which is range high. But I also think deviation below into this area is very, very likely if we do come down that far. So I guess like it's just good to get multiple perspectives. I see things relatively similarly, albeit like slightly differently to Dan, but it depends how you execute your trades. Crypto Cred has a few levels that he's targeting. I actually found it quite funny the way that he worded this. He said shallow pullback, cool. So that will be at the, roughly this level on my chart, which is the 26.5 level, this orange zone, which was the first wick above before we wicked down. This was during FOMC, back below the range. This was deviation above before we pushed up. So his level is 26.5. He's seeing that as like your shallow pullback zone, and then he's seeing the fuck me like shit zone at 24.8. This is like pretty much the next key level for me that I think if we break here, we come down into this area. And that would be a zone that I look to buy at more aggressively. Because right now it's like, no, I don't know. I don't think the risk reward's great. You want to buy on support unless you're picking off scalps. And then you've got your fuck off zone, which is 21.5, and then your fuck's sake zone, which is basically range low. If you disregard the FTX Alameda force selling crazy debacle in November, I basically call this range low 18.7. If you look on my chart as well, I've got range low marked out as 18.6 because I think the FTX area you could probably just put down to force selling, crazy panic, and we have a more clear bottom. This was generally the zone that we retested at 18.6 instead of all the way down at 15.8. I'm skeptical we get there. If we do, of course I'll buy, but very skeptical. So I'm just outlining the negative scenarios. I'm not saying we will go down this low. I'm just outlining some of the levels, some of the key levels you can look at. Crypto Cred obviously saying it's slightly in jest with some of the titles here, but the levels I think hold true, and I think most of us as traders have similar levels on our charts. Most of us are seeing just below range high as being a key level at the 24.8 zone. Most of us are seeing 21.6 as that next level, and most of us have the same range low, and we all have basically this pullback zone. So pretty much everyone is trading the same horizontals right now. Whether the market will respect it is another thing. Clearly, if the market all wants one thing, usually you don't get it. But because there's such a strong psychological draw to these levels, I think there's a chance that although we might see some price action either side of these levels, that generally they'll hold. But the market knows where people have orders set, and usually they try and wick you out. So it's not a time for me to be trading high leverage for bounces. It's more of a time to low leverage spot bounces in validation below our key levels. So I just wanted to pull up this tweet from AI Trader. If you guys don't know who AI Trader is, it's the account that Ran promoted and basically is a quant fund manager that owns a multi-million-dollar fund, but is essentially anonymous, right? So he's anonymous, but he uses AI and he runs a big fund, and he's been actually sharing his trades, and he's made a lot of money. So Ran obviously isn't going to disclose who this person is, but we've vetted them personally, and they've made a lot of money, and they use AI and they share anonymously their trades. So I've been looking at this account. They've been pretty spot on, and they have a thesis for the market. And I thought, why just share my opinion? Why not get some opinions of other people that, I know that are smart in the space and could help give some market direction. So AI Trader said they're sitting on the sidelines at the moment. However, if you're adamant about participating in the market, there are two potential strategies to consider. One, initiate a short position, setting a stop loss at 28,350. So that would be trying to play this move downwards to potentially range high, but making sure you've got invalidation at 28,350. So that would be the level just above this blue box. So that would probably indicate we're coming back up to test 30K again, and that's where you'd want to stop yourself out. Take a long position if the price surpasses 28,650. So you could short. If the short doesn't end up playing out, you could flip long at 28,650 once we have validation, and try and look for that push back up to the upside to the 30K zone. He says, Bitcoin has undergone a notable correction from its overbought status, both on-chain and from a technical standpoint. However, until Bitcoin surpasses the 24.8 to 28.6 range, the downtrend remains in effect. And that's true. We do need to reclaim highs. Because we're starting to form a downtrend here. We can bounce and then keep coming down. What you want to see is a reclamation of highs. So a bounce back in, consolidation, and then look to resume to the upside. We want to see some of this bullish price action kicking in to be like, all right, this is a dip that we want to buy. Because you always want to trade the trend, right? You can't just try and catch a falling knife. That's how I'm feeling at the moment about Bitcoin. It's important to monitor Bitcoin performance leading up to the Federal Reserve meeting. So the Reserve meeting is in 2 weeks on the 5th of May. Of course, we've got earnings in the meantime. If Bitcoin's trading above the 28.5 mark on that day or even higher, this could signal a more bullish trend. Ultimately, BTC and ETH have the potential to rebound. Technical indicators will be crucial in determining price action this week. Return to levels above 28.5 for Bitcoin next week and could indicate the continuation of a bullish run beyond 30K. Yeah, for me, that would be quite bullish. Reclaim 28.5, retest the 30K level. That would be a sign that the market, that would actually be very bullish for the market, because it would show that even in the face of adversity and even after a huge dip, there's still enough buy pressure in the market to push the market higher, and there's still enough demand in the market to push it higher. But we want to see some of that kick in, because as of now, we haven't, largely because it's the weekend and the volume on the weekend shit. We did see some strong sell volume heading in to the end of the week, but the last 2 days, guys, the volume's been horrible. Saturday, Sundays. This is why this wasn't a leverage trading weekend for me. Volume might start kicking in a few hours when the Chinese market opens, but until then, it's not really worth taking any crazy leverage trades unless you know exactly how the Asians are going to trade, which I certainly don't. I want to flip the focus to Ethereum now, and then obviously we'll get into the sell in May conversation, whether that has merit. Ethereum is holding its range high level. I'm wary of a breakdown that could take us to 1668. I'm watching how we respond to this diagonal. Look, it depends how you draw it. If you draw it like this, it's a bearish retest. If you draw it like this, then it's a test of support. Either way, depending on how you draw it, we know that we have horizontal support at range high at 1850. So far, this is holding. This is kind of your last area for Ethereum to bounce. If you want to take a long here, that would be your last level. But you got to have pretty tight invalidation below. I think at 1820, because if we break below, I see us going back down to 1680. So this could be a long setup for the guys that want to take that last scalp on ETH. Someone said buy the dip. Look, it depends what your strategy is. I think you can buy the dip, but it depends, how much leverage you're using, if you're trading spot, and what altcoins. As I said, we'll talk about altcoins in a few minutes, but the altcoins that you get into, they have to be strong, because a lot of alts are looking weak, and you don't want to buy alts that are like on their last legs, hoping for a bounce. You want to get into alts that are like showing relative strength, and that once dominance starts to shift again, are going to perform well. So that's the ETH and the dollar, basically summarized, or the ETH USD chart. Cred said that we had a failed breakout of range high at 1900. So if you go into the weekly chart, you can see we've tucked back inside the range. We've increased probability of reaching old range levels, and that level's pretty in line with what I'm seeing, which is the 1650 zone, midpoint around 1680, low around 1430. Looks rough for now, but at least the levels are clearly defined. Exactly, like if you're a level-to-level trader, I think this is like not a bad environment for you. And I did a tweet on this yesterday, which said people get overly bullish into resistance and overly bearish at support. I want to get this tweet up because I think it's very relevant right now. The thing is, if you're a level-to-level trader, you just want to trade objectively at each level. So every time we hit a level, you want to reassess your bias, reassess your trading plan, and not get sucked into the FOMO or the fear that you felt at the last level, because a new level is giving you new risk parameters. It's a new risk reward every time you open a trade at a new level. And I saw a lot of people getting very bullish at 32K. Like a lot of people, well, 31K, we wicked up there. A lot of people started to get bullish here, right? But you got to keep in mind that that's after a huge move. Like if you're starting to get bullish after let's actually look at the move, 84% move, then, I mean, you've already missed the majority of the move. Okay, sure, you could go high, you could go to 32, you can milk the extra 20%. Wouldn't you rather get the first half of the run-up and miss the rest than try and catch the end of the run-up? It's just not really great EV, right? And a lot of people get bearish at support. So if we come down to range highs, a lot of people, because this is probably the next major level of support, a lot of people are going to get very bearish there. A lot of people are going to say, that's it, that's over. We're going back down to 18K, it's done. And there'll be a lot of bad news coming out around that time, probably bad earnings, probably macro stuff that starts to come out. and that's going to start flooding the market, right? Because news tends to follow sentiment. The other thing you have to realize is that the media channels, they want to propagate the common narrative. You'll even know this with YouTubers, like the tiles and the titles we use, they generally follow the sentiment. And that's just because that's what the algorithm prefers. That's what the news sites prefer. They want people to kind of buy into the narrative here. So you kind of have to cut through the noise a little bit and not get sucked in, because at range highs, we're going to start seeing a lot of bearish news, and the YouTube tiles are probably going to be very red. Keep in mind, the content inside the videos never changes. I'm not going to change my content just because we go down to range highs. I'm not going to suddenly become super bearish. I'm going to stick to my word. But certainly the titles and the thumbnails might change a little bit. That's just the algorithm. But the reason I'm saying this is because news tends to follow price, or it moves in tandem with price. However you think it moves. Some people think news moves before price. Some people think news moves after price. However you think it works, I think we can all agree that generally when the market sells off, there will be a lot of bad news happening around that time. So you just have to be aware of that as well, because you got to trade level to level. You got to be objective at each level, and don't get bullish into resistance and bearish at support. Be bullish at support and bearish into resistance. That's what I would say. So that's kind of why I wasn't really buying heavy here. You guys know I was saying at the 30 level, like, yes, let's wait for a huge pullback, because I got my entries, a lot of big entries in November on ETH. I bought a little bit more in this zone here at range highs. I cut profits relatively early, so I did miss this final push up because I cut around the 27 mark. I am still holding some alts, but I cut a few of my positions. If you're watching the shows, you'll know that. And yeah, we've had a pullback, so now it's time to reassess level to level. So the Bitcoin, the ETH BTC chart as well. This is an indicator of altcoins. This didn't make its higher high. It actually has dropped just below the level that we wanted it to reclaim. So what I wanted to see from a bullish alts perspective was a push up, a bounce at the previous high, and then resumption, make a higher high. We're actually starting to make a lower high in here. So if we come up and reject at this level, then it's a sign for me Ethereum can come back down to the 6.4 level. Let's just monitor this closely. We really do want to flip this level for altcoins to perform well. Much more comfortable buying on confirmation above this level. And even if you go into the weekly chart, you'll see a similar thing. In fact, if you wanted a higher confirmation buy, you would trade more on the weekly chart, and you'd be looking for you'd be patient, and you'd be looking for a weekly close above 16.9 to 7. This is where you'd want to see a close above in the price, because right now it's actually a lower high on the weekly. Look at this on the ETH BTC chart. So although we did have a push up, it's indicating that we can come and make new lows. So ETH BTC is the alt indicator. So this is actually a downtrend. And yeah, although we started to see like slight deviation here, it still wasn't enough to make a higher high on the weekly. We did make a higher high on the daily, but for a more macro trend, which generally the longer your time frame, the more credible the move becomes. So a higher high on the 1 hour isn't as important as the daily, which isn't as important as the weekly. The higher time frame, the bigger the move, the more substantial the move, and also the more credible the move. So we haven't quite seen this yet for ETH Bitcoin. That's why I guess there's not a huge rush to buy alts. The fear and greed index too, the sentiment is dropping fast. This is what happens. The market reacts to price. The market gets bullish into resistance, and it gets bearish at support. It was bullish into resistance at 32K, extremely bullish. It was like the fear and greed index was in the 70s. It's dropped back down to the 56 level now. Wouldn't be surprised if this goes even lower over the next few days. People are starting to get quite fearful again, which tends to happen. So what I want to do now is go into two different segments. First segment is sell in May, go away. So I have some research to show you about stock market performance and performance of crypto in May to contextualize whether us ticking into the month of May is enough of a reason to de-risk. And then I also want to, of course, go into some altcoins and talk about some of the coins that are a bit stronger than others, and also some of the coins that are looking weak, and we'll do some charting, etc. Before we get into that, I want to remind you that we have the Banter Trading Comp starting. So with a lot of volatility over the next week, maybe there will be some good opportunities to trade. And this is a pretty huge trading comp. So we have the Tesla, and I'm not saying like FOMO into trades. Obviously, only trade if you are seeing good setups. So don't just force a trade to win a trading comp. But if it is running for a whole month. So hopefully over the next month, we do get some good opportunities to trade. Also, this starts during the week, so hopefully some volume starts kicking into the market because it's very hard to trade on weekends. So the prizes for the trading comp are pretty huge. You've got a Tesla or $40,000, which is the first prize. Then the second prize is a Rolex or $20,000, and third prize is $10,000. We're doing this in partnership with Gareth Soloway as well. So huge competition. It starts in 2 days. So basically, if you want to register and kick off at the beginning of the comp, you've got 2 more days to register. You can register at any point during the competition, but the earlier, I think, the better, because it gives you more time to build up P&L, because it's P&L based. People have been asking me, how much money do you need to compete? It's $250 minimum. So it's your P&L based on $250. So yeah, you could deposit $250, trade percentage-wise based on that. And, if you doubled $250 to $500, you would be in 100% profit. And if you start with 10,000, then it's going to be based, if you're more of a whale, then your 10,000 will be based on, your profit will be based on the 10,000. So if you double it, you would, for 100% profit, you would need to make it 20,000, if that makes sense. So the minimum is $250. You need to deposit $250 into your account. And shift it to derivatives. And once you've done that, then you qualify for the trading comp, and it's percentage based. So to get involved, if you aren't signed up already, there's a link in the description. It's the second link. Click on this link and it will bring you to the dashboard. You can click the register button. Before you can do that, you also need to make sure you have a Banter Bybit account to qualify. So you have to have either an account with Gareth or an account with us. There's a link in the description for that as well. Which is this link here. Once you've signed up for an account, you can register to join the trading competition. Also a $30,000 sign-up bonus for those that want to deposit fresh capital. There's also a sign-up bonus that we have with Bybit as well. So make sure you register for this comp. I'll be trading live on the show. And I think, it's going to be a lot of fun. I'm interested to test my skills this time, because last time I was trading, it was a bit of a weird comp. I think I ended up in profit, but I didn't do the best. It was kind of a weird period in the market where it was like a downtrend. It was choppy. Hopefully we get some clear direction from the market, and I can actually try my hand at winning this trading comp. I'm going to be interested. I don't even care if I win. I want one of you to win. You guys can have the Tesla. I just want to beat Rand and Sheldon. If I could beat Rand and Sheldon, I'm happy. And Kyle, all of them. I just want to beat the hosts. I'm competitive. That's my goal. Let's see if I can achieve that. I don't care. You win the Tesla, you win the Rolex. I'll just beat Rand and Sheldon, and then I'll be a happy man. So sell in May, go away. This is the adage that you're probably starting to see a lot of on Twitter, on the internet. I've seen it heaps over the past week. Everyone's talking about selling in May, going away. And this old adage actually is a saying that derives from the stock market. So if you go back to 1945, you will see that performance from the May to October quarter is only 2% returns, compared to, half of the year from May to October is only 2% return. If you compare October to May, so the other half of the year, the returns during that period are almost 3x, around the 6% mark, what the returns are in the May to October period. So because of this seasonality, it's led a lot of people to believe that it's better to just hold stocks or trade more bullishly, generally from October to March, April, and look to de-risk a little bit from May to October. So we can see the charts here outlining the seasonal data. This is basically month-on-month performance. You can actually see here from May to October, this period in the middle, you can see it very clearly, visually, that these months do not perform as well. This is tracked since the first chart shows each month performance in 1990. So this is 1990, and you can see seasonality is very clear. And then if you go back to 1928, then the performance becomes a bit more unclear. Like the May to September months on a longer time horizon with a bigger sample size from 1928 have still been relatively strong. So pretty weak over the last 20 years has been the May, or 30 years now, the May to October performance. More strong from January to, from May to October from January 1928. So Bianco says, this is Jim Bianco's research company, which is very good, by the way, says that The charts below illustrate one of the problems with dealing with seasonal data. Monthly S&P data goes back as far as 1928, which might seem like a long history. When dealing with monthly returns, however, that does not lead to a very large sample size. The next chart, which is the 1928 chart, shows a longer-term perspective with a stronger average monthly return since 1928 for the May to October period. Selling in May over this time frame would not work quite as well in this case. Issues with sample size are only one obstacle to using seasonal data. Even if these historical trends persist, traders would have to execute the same seasonal trade every year over a long period of time. Again, these are not meant to be used as market timing tools, so they simply highlight trends that are formed over longer time frames. 𝗕𝗏𝗕𝗓𝗔𝗐 as well, who is the director of global macro at Fidelity, extremely smart guy, one of the best macro guys, actually did a thread on this, the whole selling in May theory. He says, it's true. Historical data show that selling in May and buying back in November has added alpha to the buy and hold strategy, especially when swapping stocks for bonds instead of cash. But the reality is that much of the alpha occurred during the 2000 to 2008 market cycles. Indeed, if we change above charts to a scatter plot of the S&P 500 in the horizontal axis and the sell in May strategy in the vertical, so that's the S&P here, and then the strategy here on the y-axis, the vertical axis, we see most of the alpha can be attributed to those two adjustments. So perhaps sell in May, go away is not a motto to live by. And my opinion is exactly the same. Although there has been some seasonality, it isn't a big enough sample size and isn't a compelling enough reason in the modern climate to trade actively based on this thesis. So I wouldn't be selling all my crypto, to answer the title of this video, just because we're heading into May. There are many reasons to de-risk crypto. If you're bearish about the macro economy, if you are simply trying to take profits from the last run, if you're seeing a general downtrend, if you're a trader, maybe you've got bills to pay. There are many reasons to sell crypto, many reasons to sell stocks as well, based on personal preference. But just because we're ticking into May is not a compelling enough reason to persuade me to sell. So sell in May, go away, although it sounds very catchy and it sounds like this thing that we should abide by to make money. In practice, it's very difficult to time, and I wouldn't let it play into my trading thesis at all. 𝗕𝗏𝗕𝗏𝗕𝗏 also did an interesting tweet. He said, the month of May for the past 22 years since 2000 has actually ended up closing green more than red. So there's been obviously 23 months over the past 23 years of May, and 13 of those months closed green and 10 of those months closed red. So actually, if you look at it, not in percentage terms, but in kind of more linearly, so green versus red, then there's been more green months than red months in the month of May. What the sell in May, go away adage refers to is the period. So the quarterly or the bi-yearly period between May and October, and then between November and April. That's more what that saying is referring to. So let's go out of stocks for a second and look at Bitcoin. How does Bitcoin performance actually go in May? Well, if we look at the May performance here, we can see that it's actually one of Bitcoin's strongest months. So it averages, I think, a 30% return during the May period. 2021 was bad. That's when we saw the sell-off. 2022 was bad. That was pre-Lunar. 2019, 2018, 2014 were very strong. If we look at the quarterly results, though, to get an idea what Q2 and Q3 combined are, there is some merit to it. Q4 and Q1 are a lot stronger than the middle of the year for Bitcoin. So we can see Q4 has been home to some of the strongest returns. Percentage-wise, Q4 and Q1 combine average roughly a 90% returns. Q1 specifically averages a 90% return. And Q2 and Q3 average, I'm just plucking this off the top of my head, I wish I had the data here, I think it's around 30%. So roughly, and look, you'll need to get the exact data, it's roughly 30% versus 90%. And you can see here just visually that Q4 and Q1 have been stronger months, and I'll zoom in just so you can see it clearer, than Q2 and Q3. However, the same argument that Jim Bianco made holds true for Bitcoin. Bitcoin data only goes back to 2013 because that's when we had real volume and exchange listings for Bitcoin. So there's not really enough of a sample size here to accurately make a quarterly assessment. Another thing is a lot of Bitcoin's positive price action happened in Q4 because of the pre-halving runs that we typically see. So typically pre-halving, and you can see actually the big pumps are in pre-halving years, 2013, 2017, and 2020. Most of the returns happened in these years. if you were going by that logic, then maybe we will see this year, because this year is a pre-halving year. Theoretically, this year should be the big gainer. But I'm skeptical, and I'll tell you why I'm skeptical, because I don't believe, and this is kind of a general problem with crypto. I don't know if just a 3-point sample size is enough here. I mean, 𝗕𝗫𝗕𝗃𝗃 said that having 80 years of data still wasn't enough on a monthly time frame. So how can you take 3 cycles and assume that because the last 3 cycles were insanely bullish, that this next cycle has to pump in Q4 pre-halving? You'll see a lot of crypto traders talk about this pre-halving narrative. And yeah, it's strong. And yes, there's going to be investor buy-in. And yes, there's likely going to be a pre-halving pump because it's a narrative. But whether it sustains itself or whether this run is preempted is going to be the interesting thing. So yes, theoretically, we are due for that big rally in Q4. And if you're looking at the same data, then you'll see that there could be strong performance in Q3. And if you're looking at that data as well, there is relatively strong data in Q2. That's because we're in a pre-halving year. But there's a very key difference. And the key difference is we're in a quantitative tightening cycle and we printed too much money. And we're now starting to remove that liquidity. And companies are feeling the brunt of high inflation because interest rates have risen. And we could see bad earnings. And that could hurt the stock market. So it's a very different scenario from this endless free money QE environment that we've seen since 2013. So the historical data on crypto isn't as strong as I would like it to be. But anyway, if we want to look at the historical data, for the ones that do want to look at it, I have a few charts to show you the different markets against each other. So just to give you like a bit of context. And once again, I don't think historical data in crypto is as amazing as certain traders may believe it is. But if you want this data anyway, I've got it. And I wouldn't totally disregard past data, by the way, because look, we know the last 3 times pre-halving we've seen a run. And yes, we probably get a run. But whether it's as explosive is my question. Whether it's explosive in the face of the current macro environment versus previous cycles, that's really my major question mark here. So here's the bull run. 2019, you had 6 average drawdowns of 10%. You had an average drawdown duration of 12 days. I don't know my other chart. In 2021 / 2020, we saw 6 drawdowns of 10+%, and then an average drawdown of 19.3%. So 2019 versus 2020, we can see the average drawdown was very similar, and the average drawdown was usually 12 days. If we look at, and there's a lot of runs pre-bull market as well. We see here that the price started to run later in the year before the big bull run the next year, and we saw in 2021 the price started to dip earlier in the year before the next bull run as well. If we look at the current cycle, and let's say we are in a pre-halving cycle and we're prepping for the next bull run, then we're currently down 10%. If you want to make the argument that we follow like the average drawdown in the year prior to the bull market, then you could argue that range high actually makes a lot of sense for this to be one of those drawdowns before the resumption of the uptrend. So if you're a bull and you think the pre-halving run will eventuate, then that could potentially be just a guideline for you to contextualize how deep this run could be before the resumption. Typically at the 19% range, that would take us down to 25K. So that's just a bit of interesting data if you do follow that. But yeah, I'm a bit of a skeptic personally, because I think this year is very different from previous years. Okay, let's talk about alts now. Let's get into the fun stuff. We've talked a lot of macro, a lot of Bitcoin. I want you guys to actually no questions yet. We'll do questions in a little bit. Someone said just buy Bitlist PEPE. I actually think PEPE is one of the strongest performers. I don't think it has. I think it's getting listings. I know it got listed on Huobi. It's still one of the strongest performers. It's freaking crazy. It's on Mexi, Huobi, BitGet. We're probably going to get that Bybit listing soon. All the exchanges. I mean, think about it from an exchange perspective. If you're an exchange, you want volume because you want fees. You want to make revenue. Having the most traded pairs on your exchange means you will get the most fees from the trading. So it should actually get a listing. Most time, BlackRock sells, the market absolutely tanks. Is BlackRock selling though? That's my major question. Chris, can you answer me in the comments? Is BlackRock selling? And if they are, do you have data behind that? Because I would love to see some data behind that. Someone said, what about 𝗬𝗎? Sui's interesting because they announced their it's not an airdrop now. It's like it's a pre-sale. I was a little bit disappointed. I've spoken on this in the past. I was a little bit disappointed that they didn't end up doing an airdrop. I think it would have been a great way to band together the community, generate hype like 𝗕𝗏𝗕𝗓 did and Aptos did. And I think them not doing that was a mistake. I understand why. But then again, since there was so much hype for an airdrop, since everyone expected an airdrop, I think just from an EV perspective, if I'm Sui, I'm just going to do an airdrop. Even if they don't want to do a huge airdrop like 𝗕𝗏𝗕𝗓, just something. Like, okay, do your pre-sale on the exchange, sure. But then at least do like, I don't know, 30% of what the initial airdrop size would have been. Just to give back a little bit to users, just for the optics of doing an airdrop, even if you didn't believe in it. But they didn't clearly want those optics, and yeah, I think it was a mistake. I still think Sui could be a good chain. Let's see. Like, obviously, we need to see it in practice. A lot of chains now launch and then their tech's just shit, and they don't actually live up to their promises. Because a lot of chains, they obviously in testnet environment, they perform really strongly, and then you get to mainnet and they don't perform as strongly. Similar things happening with zkSync right now. The fees are like exponentially higher than we expected, largely because the way zkSync works is fees scale. So the more users on the network, the more division there is amongst ETH fees. Because what zkSync actually does is it takes like the ETH fee amount, and based on usage, it will divide those fees. ZK products work interestingly. Actually, the more users, the cheaper the fees. It's opposite to other chains, which are the more users, the higher the fees. So zkSync actually, I don't think has enough users, and that's one of the and obviously ETH fees are really, really expensive. That's one of the reasons why their fees were high. So yeah, zkSync kind of hasn't really been amazing to use recently. Sui, we may see a similar thing. Larry Fink in BlackRock sold. Let me actually look this up. Larry Fink selling. I'll see if he actually is selling. Oh no, he's selling his BlackRock stake. Larry Fink's selling 7% of his stock. But is that BlackRock selling or just his stock? This week I have major market leaders, earnings coming out. Google, Microsoft, Meta, Amazon. Huge week for earnings, guys. Apple next week on the 4th of May. This will give us an insight whether we're going to have a strong pullback and unemployment starts to take off. Look for labor data. So look at the kind of layoffs that we're seeing. Should be noted that FOMC on the 3rd of May and CPI after. Yeah, this is a crazy few weeks. It's going to be, oh my God, earnings, CPI, PCE this week, FOMC. It's going to be pretty crazy. Unemployment's still the major metric to keep our eyes on. Bad earnings could cause a market sell-off down in anticipation of unemployment rising. Actually interesting to look at the S&P here as well. It actually looks toppy. Looks very toppy to me. It's so sure, we had slight deviation above in September, but generally we've had rejections from the S&P at this key level at the 4200 zone. Clearly, like a break above would send it, back probably to 45, 4600 and crypto rallies, but it does look like it's rejecting. It does look like it's rejecting off this level. And if we do see a stock market sell-off, probably takes us down another 10%, and 5 to 10% in crypto is probably a 20% move, and that would be a Bitcoin move down to range high again. So that's kind of a lot. There's a strong case building for a pullback to this region. There's a strong case building. Now, I won't trade on it solely. I'm still hopeful that, because I would love to see the market go up, but that's my personal bias. I'm still hopeful we get a bounce and then a retest and we can look at alts, but there is a very strong case building for this zone being a key zone. So, yeah. I was getting distracted. What was I talking about? Oh, Sui. So it's him selling his personal shares. Okay. It's a personal sale then. Bought Quenta. So I haven't bought Quenta, but it is on my watch list. Drake did a tweet, and I want to highlight this tweet. Drake on digital. By the way, this food farmer guy eats a burger every day. I don't know how your body's handling it. I had a burger yesterday. Hot take here, by the way. Burgers aren't that good. Hot take. Like, I don't know. Like, they're not that good. They're really not. I've had multiple burgers. I know Pal is shocked, but pizza's better. So, like, if I'm going to eat 1,000 calories, I could have a burger, or I could have a pizza or a bowl of pasta, and for the calories, I would much rather a pizza or a pasta. So, I don't know. I've just had, I tried to, like, diversify my burger restaurant choices. So, I've had, like, 3 in the past month, because I wanted to, like, make sure I didn't like burgers. I didn't want to just judge. So, I had multiple burgers at multiple restaurants to like make sure I didn't just have one bad experience. And I've come to the conclusion that, okay, they taste okay, but there's better foods for the calories. Pizza and pasta being two of them. Sorry, everyone. But burgers are overrated. They are overrated. They're overrated. There's better foods. There's better foods and healthier foods that taste better. So some people agree, some people disagree. That's just a little hot take for you. But anyway, meme coins. So Drake did this tweet, and he highlights something really important. I discussed last week how a lot of exchanges were implementing. Okay, power stop. Get over it, bro. Some people don't like that opinion. Who cares? Oh my god. Oh, I'm so sorry. Do you want me to just tell you what altcoins to buy then? All right, I'll do that because clearly people don't want to hear about my food opinions. So last week I talked about KYC being implemented on a lot of big exchanges. I think that is inherently a catalyst for DEXs. A lot of these DEXs now have very compelling tokenomics. 𝗕𝗬𝗕𝗏 being one of them. Look, I'm not sure about level because there's a lot of wash trading. It actually was one that I was eyeing. Let's see what the level price is now. I remember I was eyeing it around like $4, $4.50. It's now at 9.30. Okay, so it would have doubled. I didn't get a position, so I missed this. But yeah, I was spot on identifying it. But there was a lot of wash trading, which is what put me off. 𝗕𝗬𝗕𝗏, however, it has OP incentives. It has quite a strong growth in trading volume. Quite good tokenomics. They just turned on a fee switch, so now stakers earn a percentage of fees, and we're starting to get a pullback on it. So this is one in my watch list. If Bitcoin ends up going to 25, this will be one I'm buying. Let's just look at some specific levels. It's one I'm interested in, and I'm seeing some nice growth. It's more of a DCA coin for me. All right, so we broke below range 1. I think range 2 would be a good place to buy. By the way, our levels held perfectly. It would have been a great short. Not sure there's leverage on it though. See what market it's on. Actually, there might be. It's on Mexi and BitGet. Probably gets more exchange listings soon as well. So yeah, for 𝗕𝗬𝗕𝗏, I'd love the 496 to the 565 zone. It would need to clear this blue zone and then retest for me to buy in this zone. If it rejects, I think we see lower. And yeah, then you've also got, look, TA on this isn't great. It's just really a broad, these are really just broad levels for me to get an idea of zones to buy in. Because TA on a coin with 3 months of price data, you don't want to trade TA on this. It's more just for me to get mentally set with risk reward. And actually trading is all about that. Trading's all about helping you get better entries and better exits. So 𝗕𝗬𝗕𝗏 is what I'm looking at, probably in the 400 zone. 440 to 500. 5 to 550, maybe I start nibbling. Yeah, this is a good one. Drake also pointed out Gains Network. Gains Network's a sponsor of the show. Of course, if you do want to trade on Gains, there's a link in the description. Their platform is very good. You guys will know this if you traded on Gains. I know a lot of you probably have. They have a lot of trading pairs. Their platform is very strong. And I think this is one of the major drivers behind why the tokens perform so well. Because they've got a very good platform, it's relatively sticky. A lot of people just have decided, well, let me trade on Gains Network. Let me trade on G-Trade because it's a good platform. And because of that, volume has been very strong. It's launched on Arbitrum, so we saw a lot of arb traders trading on Gains. And yeah, I just think it's a strong platform. So as a token, of course, we're sponsored by Gains, but we're not sponsored to shield the token. It's a G-Trade partnership for the platform itself. But in my personal opinion, on the token, I am a holder and I view it as a decent bet. But I am a holder. I've got a vested interest. Just want to make that perfectly clear. You have to work out yourself whether you think it's a good bet, but it is one that I'm looking at. Now, I won't be buying Gains Network for the sole reason I have enough and I'm happy. And I bought it at $1.50 and I've sold some on the way up and I'm well in profit now. And I'm just riding a moon bag and I've got enough that I don't want to buy more. So I'm more looking at other ones like 𝗕𝗬𝗕𝗏 and some of these other coins as well. After the big unlock later this year, 𝗕𝗏𝗕𝗏𝗕𝗏. I'm big on the DEX narrative. It's so clear to me, the trend with DEXs. And it's one of the only narratives that, even if the market tanks, can still hold up because it's a volatility play. More volatility, more fees. These kind of... I don't know much about level. I like 𝗕𝗬𝗕𝗏, I like Gains. GMX, it's the biggest, it's the safest, but no, I don't mind it. And then I'm seeing more burgers. I would eat this. I'm not saying I wouldn't eat it. I'm just saying, like, I'm very... it's opportunity cost. like when you open a trade, right? If you open a Bitcoin long, the opportunity cost of opening the Bitcoin long is opening an Ethereum long. So at any given moment, you have to make sure you're in the best possible trade for that allocation of resources. Now, I view calories as a resource. So I view my day as, let's say, 2,500 calories. That's how much I can eat and maintain my weight. So if I have to allocate 2,500, just like crypto, if you have to allocate $2,500, you want to be in the best allocation possible. Now, if I'm allocating 1,000 calories, half of my day basically, to a burger, I have to make sure that's the best allocation of my capital, which is my calories. And for me, I would much rather have a pizza because I get more enjoyment from it and I feel less shit after it. And yeah, that's how I'd rather allocate. It's all opportunity costs. So you can start applying that to your life in many ways, and you could become an analytical freak, like, you know, not going to a dinner with your friends because you could be trading and make more money. If you get too deep with it, it'll probably ruin your life. And I've been through very extreme times of thinking that way, and it often just leads to like more stress. So I try and not do it too much. But if I am getting really, really analytical, I could liken a burger to opening a crypto trade. And I hope maybe that makes my logic make more sense. Go 10x leverage on the burger. No stop loss. No stop loss, bro. All right, let's get into some questions because I'll hang around here for a little bit. Please focus on alts, bro. I'm sorry. So I've got some of the dexes in my watch list. I also have still INJ on my watch list. See, a lot of this is so dependent on Bitcoin. That's the thing. So if we look through some of my alt pairs here, alt BTC pairs, let's go through some of the ones I'm interested in. Doge actually broke down below on BTC. I want to look, because I'm still interested in Doge. I want to look at Doge on the USD pair. So actually looks quite nice. Still waiting for this bigger zone for a buy. Obviously, we had a breakdown. Unless we start reclaiming levels on the daily, then still to me, a little bit more downside. Obviously, post 420 as well. Let's have a look at some of the other alts that I'm looking at. zkB is what I'm interested in. This is a China coin, and I think it's a very strong narrative. I'm looking at this one as well. Basically, my same watch list from a few days ago, right? Nothing's really changed apart from the fact the price action still looks shit. Joe, where's Joe? Let's get up Trader Joe. Wow, Trader Joe just broke straight down. So now I'm looking at the 40 to 45 zone. All this is in confluence with Bitcoin though. So I'm really trading off Bitcoin. If Bitcoin goes to range high and I'm buying alts, I'll get into some of the stronger ones after I see a reversal on their BTC pairs. If we look at, let's take this logic and run with it. Let's look at like Joe BTC. Okay, Joe's a coin I want. Let's say I want to buy Joe. I want to look at the BTC pair, and what I'm seeing is actually a weakening BTC pair. So if we don't bounce here, like we can go way lower on the BTC pair, way lower. And what I would want to see is a resumption of an uptrend before I get in. So I don't want to buy weakness on the BTC pairs. I want to buy strength. I want to buy good charts. This doesn't look good to me. This looks like it might just shoot through to the downside. So that's why right now, today, I wouldn't buy Joe. So I'm just trying to help you guys understand my logic, and you can apply this to any coin. So if we look at Injective BTC, this is another very strong coin. You guys know I'm waiting for sub $7. On the BTC pair, it's starting to look bad as well, having a full retrace. And, you know, its next major level isn't until, I mean, it's still another 27% away. So you see what I mean with a lot of these alts? They're starting to break down a little bit, and that's why I'm like a little bit cautious heading into the week. A big earnings week for INJ. We're now under $7. You see my line here at 580. I'd much rather get a buy at 580. And then once we start an uptrend, I would love to see it start to outpace BTC. What are some other coins I'm looking at? I get asked about Render a lot, and Render actually looked quite strong for a couple of weeks. So the Render chart, I'm seeing a similar thing. I'm seeing it start to break down. Strong candidate to hold 150, but let's once again look at it on its BTC pair. BTC pairs are more important right now than USD pairs. I would say hot take. It's not really a hot take. It's kind of just logic at the moment. And sorry, I did Injective. I'm supposed to do Render, BTC, Render BTC. Starting to, yeah, see, downtrend. I want to see uptrends. So I want to see uptrends. Especially if you go onto the daily, like look at this trend here for Render. See how it's starting to kind of look a bit no, not that. starting to look a bit toppy. I'll show you what I mean. Like that. See? Look, start to break back to the upside, make a higher high. Sorry, make a higher low. Then I start to get a bit more confident. I just want to see some strength from a lot of these. It did have a nice bounce. But okay, if this breaks the upside, you can long render. But let's see where it breaks. That's the major question. Also on the 1 hourly chart, not as strong of a trend as like let's say your 4 hourly charts. Woo falls into my my DEX narrative actually. Woo falls into my DEX narrative. So if we look at Woo, once again, looks bad. Most of these alts look bad. That's the issue. I want to look at Curve as well. Big news happened with Curve. No, Woo BTC, not USD. Curve actually could be a long. I'll show you the Curve chart in a second. Woo BTC, like look at that huge candle on Woo BTC. So I wouldn't buy Woo for that reason. Okay, so let's look at Curve now. Curve stablecoin, Curve USD is close. We actually saw the contract deployment. Where was it? Here. So we can see the contract got deployed. A lot of people starting to speculate now. It's in development. So it's not officially launched, but okay, it's probably weeks away now. Like a matter of weeks. So for Curve and Power, it's looking like we are going to cross the hour because I don't feel like rushing this. Curve USD looks okay. Reclaim here. Very good long on the 4 hourly or the daily. This is a very key level for Curve. In fact, I'll make it more clear on the daily chart. You can see this was the first level that came down and tested, acted as support throughout most of 2022. When we broke down, this was the key level, broke down obviously in FTX. A big dip below, but in general, this has been like its range low for this range here. This is a very monumental point. It could be a bearish retest, and then like obviously we'll target lower, or it could follow this trend of making higher lows and confirm. Once it confirms above, then it's a long. With the stablecoin announcement, this could be a decent long. Just wait to see how it reacts in this zone. It's definitely one on my watch list though. I've got a few things on my watch list. This is on. Miles thoughts on 𝗕𝗓𝗓. I just prefer DOT long term. Like I struggle to understand the 𝗕𝗓𝗓 value prop. And the chart looks this chart looks awful. Like no, like this is the worst chart I've shown all day. This and 𝗏𝗏 have the two worst charts in crypto. So let's actually look at it. Actually it could be worse. It could be here. If you cover this up, it could be here. But this is like, yeah, you want to see on a high time frame a break above of that level. Until then, it's looking shit. DOT. Same thing. Blue zone would actually be my short zone. So if DOT comes into this zone, let's short it with a stop above. Not that high. Or I'm going to have to use... No, don't do that. No X leverage. Oh, TradingView annoys me sometimes. This level here. Let's look for a rejection. So yeah, DOT and 𝗕𝗓𝗓 are not buys. They're both looking shit. In fact, we don't know. I don't know. This eco hasn't really proven itself. Hasn't gained much traction. We're seeing this trend at the moment where just L2s are sucking all the liquidity out of the market. New L1s are launching. To be honest, Cosmos has performed a lot better than DOT. And the Atom token itself isn't the one you even really want to hold. You really want to hold Osmosis and Injective because they're the ones that have like more of a value prop. But even Atom, at least, and this is the terrible historical chart, but even Atom, you could see it's formed some sort of uptrend. Let's see if Binance has better historical data. No. But even you can see, like, compared to DOT, Atom has a better uptrend. And the Cosmos ecosystem in general is just a bit stronger, although Atom isn't the token I really want to hold in that eco. Let's go AVAX. Yeah, AVAX looks strong, actually, compared to most alts. Sure, it has had a bit of a sell-off over the last few days. Everything has, but it's holding up. So if you look at AVAX BTC, it would have dropped, but not as much as some of the other coins. look here. So you saw how I showed you like a lot of other coins before, and their BTC charts looked like this, like they were just tanking. AVAX actually holding up. So if the market bounces, AVAX will be a very strong performer, in my opinion, based on the fact it's holding its USD levels. It looks okay for on its Bitcoin chart. So yeah, if the market drops, AVAX will be one that I would long over other coins. Someone asked, ARB and Sol. Okay, these are two really important conversations. So let's go on to the ARB chart. ARB wants $1.20. It just does. I'll show you what I mean by that. So $1.20 is looking inevitable for ARB at this point, and I'll show you why. Delete. Okay, so this is the ARB chart. 3 major ranges. Top of the range. We were in price discovery for a couple of weeks. Went back into the range. Unless we reclaim this level here, so ARB get backs above and looks to make a new high on like the 4 hourly, then I think ARB is very attracted to this zone. And this is the general zone I'm looking at. ARB is very attracted to this zone. No, give me the freaking trading view, man. This zone here. So yeah, I think ARB gets down there. Personal opinion, but and if you want to trade objectively and not just based on my opinion, then you would want to see a bearish retest of mid-range. This then becomes a decent long zone for ARB, in my opinion. But ARB is a strong coin as well. Like, it's similar to AVAX, in my opinion. It should be an outperformer. Korea started bidding it. When $2 ARB, when Bitcoin finds its bottom and then bounces again, then ARB has a shot. But in this environment, it would need Bitcoin to still perform well. Let's look at what's the other coin I wanted to talk about. Solana. Let's look at Solana as well, and then we'll go through the market and look at what's trending. Solana actually broke down. So this is a daily chart. So let's go to the daily. Solana actually made a top. It's a triple top. Lovely. It's actually quadruple top. Multiple tops. This zone was actually a perfect short zone. Then your next target is $19. This is your last chance to long with a stop at $18.90. So at $19. And then, so this zone in here. And then you can look, look at a long. If you get stopped out, then your next level is 16. So we're in a range for Sol. I'll show you without the drawings. Trading view. Actually, my fault, not trading view's fault. I draw a lot of shit, and I don't want to hide my other lines. So we're kind of in this range. This pattern here between these two boxes. So you can still probably trade this range. And set your stops below on either side. Problem is it's hard to short because of the wicks we see above, whereas we've seen pretty strong bounces, 1, 2, 3, 4, 5, like maybe 5 in the bottom zone. So it's easier to long. It's easier to long than it is to short Solana. Exception being if we break below. So I would long here, stop loss. If you get wicked out, look to re-enter a short here, and then look at your $16 target. So hopefully that plan makes sense, and just disregard the mess on that chart. Just get rid of all of it. Is algo safe to hold? I don't know. I don't know. I'll look at the chart, but I don't love algo as a. I mean, 𝗕𝗬𝗕𝗏 likes it, but I don't know if I like it as a project. So there's just like I'm pretty selective with what I hold long term. Personally, algo isn't one of those things, but you obviously might have a different reason. You might have a reason why you love algo, and if you love it, then it's kind of in this downtrend. It doesn't look like a long to me. I mean, what do you? It depends. How do you define safe to hold? Because this thing can go to like, 5 to 10 cents. Alts can get smashed. So is that safe for you? Do you mind DCAing all the way down? If you have conviction long term in any project, then you might just have to be willing to just buy down, and if it pubs, buy up, just to get an entry. If you're really bullish long term, then yeah, and you're DCAing, then okay, it's safe to hold. But are you gonna puke at a 5-cent algo? Or are you gonna buy? If you're gonna panic at 5 cents, then it's not safe to hold. No, because then if then it's not like alts can do that. It's not safe for you. If you're fine to buy down to 5 cents, then yeah, it's safe to hold because you're mentally prepared to deal with a big sell-off. Thoughts on Phantom? I really like. I mean, FVM. I like Phantom. It's one of the stronger ones for me. It's got FVM launching this year. Andre is actually working on a new project. I wonder if it's built on Phantom. Look at this. Andre working on a crypto payment infrastructure. I mean, he only builds on Phantom, this guy. So that could be cool. Like, he would never build on non-Phantom, I think. Phantom in its key support zone here, actually. So in terms of scalp longs, you can actually look to play this in terms of scalp longs. But it doesn't look amazing because we did have the high and we've seen like a lower high. On the daily, we also had this middle high, but on the weekly, it is a lower high, a very clear one. And then okay, this box is kind of stupid. It's too big, but I don't know when I drew that or why, but it's more like this. FTX being the exception for a lot of coins. So Phantom, if it breaks down on the weekly, then your next level is actually 20 cents. So there's not much in the middle. On the daily, there is a little bit. Actually, to be honest with you, 20 cents if it breaks is pretty, from a TA perspective, not unreasonable. You also have mid-range, which is this zone, which is still like a decent area. I'll make it a different color. So a red color. So this is mid-range. That's your next bounce zone. So yeah, you really want to bounce here if you're Phantom, or 30 cents is your next target, then 24 cents is your next target. This is a great accumulation zone long-term. So for me, long-term, like I'm not buying these coins long-term. I'm trading them. I hold Phantom long-term because I got entries down here. I also got entries way higher. So I'm just DCAing now. My DCA levels, I think 30 cents is a decent zone. Then 25 cents is a decent zone. And then another DCA level that I don't mind is 16. And then anything lower. But I want to be picky. So I'm not buying long-term now. Maybe you can trade it, but the long-term buy, I think we see lower. Hard to have conviction right now. It is. I have a lot of conviction in Bitcoin and ETH. It's hard to have conviction in a lot of alts, just because of the way the market works. A lot of alts don't survive. Hard to have conviction buying alts long term that we know aren't going to survive. So that's why, look, I'd much rather use alts as a proxy to make more Bitcoin and ETH, and then obviously picking some selective alts. Like I'm big on the DEX narrative. There's a lot of DEX and DeFi products I see that I love and I want to have exposure to, but not necessarily long term. You got to be very selective with what you hold long term. So yeah, it's hard. You need to have extreme conviction in a coin to hold it, because if you're not willing, so let's say you have extreme conviction in Phantom, you're not willing to buy this all the way down and keep buying here and buying at 10 cents. If you don't have enough conviction that to make you buy at 10 cents, then you probably shouldn't be holding it long term, because you need to be prepared with alts for huge pullbacks. If you weren't buying Phantom here, but you were buying it here, then what are you doing? Like, if it's a long-term hold, you needed to be prepared to buy this zone, and you should have bought it with no hesitation. So if you don't buy it here, right, then that's a strong indicator that you don't have conviction in the project. Now, conviction is hard to build. Conviction is very hard to build, and that's why I'm so selective with what I hold now. Conviction is really hard to build. So you need to make sure you have it if you're holding a project long-term. If you look at your portfolio and you don't have conviction in that project, be honest with yourself. Ask yourself, if this goes down 50% tomorrow, am I buying? If the answer is no, you probably don't have actual conviction. You have fake conviction. If you don't have fake, and if you have fake conviction, just trade the coins and don't bother holding them long-term. The DCAing long-term approach is only for people that have a lot of conviction. With Bitcoin and ETH, I have a lot of conviction. So that's why I'm happy to just buy whenever, right? With alts, I've got a conviction in a few, but I'm not holding a 30 altcoin bag for the next cycle. It's not my strategy. It may be your strategy. It's not mine, because I know my personal temperament. I know that if the market goes down 80%, I'm not going to feel crap buying Atom, because I just don't have that much conviction in the token, right? So I'm going to feel bad doing it. So I can't stick to a strategy like that. I have to treat every altcoin differently. Drink some water. Sure. Don't know why, but cheers to the water, gang. My throat was getting dry, actually. No 30 alt bag, 5-ish. Yeah, to be honest, if you just have 5 altcoins you love, that's enough. Because that doesn't mean you'll never be in more altcoins. You might have 5 you love. Like, you love Bitcoin, you love Ethereum. Okay, let's say you're bullish on Phantom. There might be a DEX product you're really bullish on. You might love Synapse. You might really love Bridges. Like, for me, Beefy Aggregator long-term, I think, like, I'm not going to be able to time the bottom on that, but Beefy, for me, is a project that, look, if it gets low, I think it'll, in the next bull run, it'll take a lot of the market share of an increase in staking. So Beefy, for me, is one of these, like, that'll stack long-term. As I said, I've got select ones that I'll stack. But I don't give a fuck about price on this. If this goes to $50, as long as nothing fundamentally has changed, I will buy more. Just as a long-term bet, right? Because I believe in DeFi. Or, you know, Bitcoin ETH, I'll bet long-term. Maybe you have an L1 that you'll bet long-term. If there's 5 of them and you just want to DCA into those 5, that's fine. Because when there's a sector that's outperforming, then you can always get into that for a short-term trade. I'm not saying don't trade gaming. I love crypto gaming. Do I hold a lot of it long-term? No. I might only hold one project long-term. That's actually 𝗨𝗏𝗆𝗏, because I believe in it long-term. I love 𝗪𝗧. I like Gala. I love a million games, but I would rather get into them when we see sector outperformance, and I'll trade them. If we see Metaverse starting to catch a bid, if we see a big game launch and some rotation into other games, I'll get into those games, I'll ride them up, I'll take profits heavily, and then I'll diversify back into coins I want to hold long-term, like Bitcoin and ETH. But I don't know. I don't have conviction in every single gaming coin, so I don't know how I can hold that through a huge market dump event if we get one. So for me, that's why, yeah, if you can only hold 5 coins and you believe in those, then hold those 5 coins, and you can still get into gaming, you can still get into DEXs, and you can still get into interoperability and privacy and the other million narratives you want to get into when the time's right. But it just means you might not hold them all the time, right? So it depends on your strategy too. Your strategy might just be to buy and hold, and that's totally fine. In fact, most buy and holders end up outperforming the market. I'm just saying, make sure if you're buying and holding, you're only doing it with projects you have conviction in. Don't convince yourself you have conviction because prices have bounced. Test yourself. Make sure that if that project went down back to its lows, you would actually buy more. If you don't, you probably don't have conviction in it. You probably shouldn't be holding it long term. Takes ages to build a metaverse. Yeah, I think crypto gaming, by the way, will be one of the strongest performing sectors next cycle. It'll be huge, but I don't know which game's going to succeed. I don't really feel like buying 30 and holding it for years, just watching the tokens bleed until one day I get a huge pump. I'm just keeping my eye on which games I'm seeing starting to build. And if there's a game that I'm seeing gaining traction, I'll buy it. But I won't just kind of blindly guess on the gaming sector. That's some high quality H2O. All right, I think this is it for now because I'll stream tomorrow and the next day, or I'll be doing a lot more streaming. I wanted to remind you about the OKX comp though, before I head off, because we're currently in the last week of this Maldives holiday. So if you want to win a 7-night holiday to the Maldives or 7,500, you can trade on OKX now with a minimum of $1 and qualify. You simply need to use the link in the description to sign up to an OKX account using this link, and then you will get entry into the competition if you click join now. And it's not a trading comp, so it's not P&L based like the Bybit one. The more volume you trade, the higher chance you have of earning. And I will draw the next raffle ticket on the 1st of May. After this, it's the big prize. Now, guys, make sure you're prepared for the big prize, because on the 2nd of May, we're giving away a Tesla in the OKX comp. And you know what's interesting? I'm going to give you a bit of alpha if you're watching the show really late. I know 30 people just dropped off, but they're missing this. My OKX numbers, I'm giving you a bit of an insight into the numbers. I think I have like 1/10 of the traders on OKX than I do on Bybit, right? We can track it through our links. No one, comparatively to Bybit, is trading on OKX. So your competition to win this Tesla on the 2nd of May is literally like 200 people. I don't know if it's more on Rand's links because he might have more signups than me, but I use mine as a gauge. You don't have much competition. Like, if you do any decent amount of trading, you probably will be in the top 50 because there's just not many people trading on it. And if you're in the top 50, you literally have a 1 in 50 chance of winning 50,000. The risk reward's actually really fucking good. I'm not just saying this to get signups. I don't care if you don't sign up. I'm genuinely saying this like in an honest way. There's really not that many people in this. There's less people doing OKX trading than Bybit. Like Bybit, I think we have 565 registered for the comp for the same prize. It's still a Tesla, except with OKX, you can literally trade $1. Obviously, the more you trade, though, the more chance you have of winning that Tesla. But you could literally trade $1. So honestly, someone said not anymore. Yeah, but no one watches my show. I have 750 people watching now. Rand gets thousands. Rand gets 3,000, right? So as long as Rand doesn't shill this too much, and he'll probably just shill Bybit, because he prefers that. As long as he doesn't promote OKX too much, and it's just my show, I think the competition is really low, and I don't think he'll promote this much. I think he'll probably promote Bybit more. So I'm just letting you know that there's not actually that much competition. So there's a link in the description for this. If you want to sign up and join, and once again, you can trade $1. More you trade, more you earn, but trade responsibly, of course. Don't risk money you're not willing to lose, but it does look good from a risk reward perspective, in my opinion. So just thought I'd let you know, give you some insight into the numbers there. Is there any way of checking my OKX to check out whether it's linked? Yeah, because if you go into this dashboard and click join now and log in, I think it's gated for Banter signups, I think. So yeah. I don't know. Apart from that, I don't know. I don't know how you would check. So just check if you can join. Apart from that, I don't know if you can check. But if you sign up using this link or any of the Banter links, you would be qualified. So yeah. Of course, we also have the Bybit comp, which you can register for, which is starting in a few days. All right, I'm gonna see you guys tomorrow. Gotta love you and leave you. Big week coming. Hopefully, I know this video was long, but we did cover a lot. So we covered obviously Bitcoin, ETH, general market, sentiment. We covered sell it may go away as a theory. Then we also covered altcoins, some of the altcoins I'm looking at buying when the time's right. And we also covered DCAing long-term hodl strategies, etc. So we covered a lot, lots of stuff to dissect here. And until the next one, I will see you tomorrow or Wednesday. I think tomorrow, depends on whether I do a spaces, but either way, I'll be streaming around the 9 a.m. time. Okay, I'll see you guys later. Have a lovely day. Peace out.